Well, good morning, everyone. This is Scott Thompson. We're here for our Stock Investing for Beginners webcast. Great to be here with you today. I appreciate you taking some time out of your schedule on Monday to be with us. Hello, Sharon and Eva and Lawrence and Janelle and everybody else that's here today. Appreciate you taking some time to be with us today. Today we have a lot of stuff to cover. We're going to be doing, I want to review basically our sell rule on our two green arrow plan that we're trading. Also have an announcement to make today again. So I'll show you some resources that are available. And then we will have our special toward the end of the session today. We'll have our live only ETF update, which we've got some exciting things going on there. So lots to do today. Let me go ahead and jump in. Remind everybody that our presentation today is for informational purposes only. Nothing that we cover today is meant to be an individual recommendation or a personalized investment advice. Schwab does not recommend the use of technical analysis as the sole means of investment research. And paper money software, which we are using, is different than the live trading. There's some significant differences there in the live versus the paper money. Remember that the execution of a stop order is not guaranteed to fill at or near the stop price. And remember that all investing involves risk, including the loss of principal. Let me go ahead and share my screen here, and we'll do our announcements first. As we announced last week, on the next week, starting on Monday next week, we have our new Q4 webcast schedule. If you go to the Schwab coaching page, and I just chatted that link in earlier before we started. But if you go to schwab.coaching or schwab.com/coaching/webcast, you can get our webcast page. If you go to the month calendar here, this October 6th will be our new schedule. So you can see our webcasts will be on Wednesday afternoon at 2 p.m. Mountain Time, 4 p.m. Eastern. So just that'll be a change for our webcast. In this time slot, starting on Monday, we're going to have an advanced option strategies webcast called Straddles and Strangles. Options are not suitable for all investors, so be aware of that. But we do have a new webcast starting on Monday next week. Connie will teach that. And all of the other changes you can see here on the schedule as well. We also, this weekend, I'll be in Chicago. So if you're in the Chicago area, I'd love to see you. Come out and say hello. But we have our Market Drive event, Chicago. That's going to be in Schaumburg, I think, at the Renaissance is where that is. But anyway, love to see you there if you're in the Chicago area. Come say hello. So anyway, those are the announcements that I wanted to make. Let me go back now to our slides. And I want to review, we have an exit rule we created several weeks ago. If you want to get all the details of this particular trading plan, it's episode 3. So like 14 weeks ago that we taught this sample investing plan, and this was an alternative to a buy and hold strategy that we're doing on the ETFs that track the NASDAQ 100 and the S&P, and a buy and hold strategy where we're using a fractional share product that's in the Schwab page, which I'll refer to back here in a second and disclose that. But I want to talk about this rule first on our two green arrow plan, because we got stopped out of another stock on Friday. So that means we have an opportunity to buy some new stocks today. And so I'll need your help on that as we look at some different, different buy signals, and we'll talk about that. But what I wanted to talk about specifically was our sell exit plan for this particular investing plan that we use. So the first one is our initial stop order. The initial stop goes 1% below a 50-period moving average. We're using the S&P 100 stocks, but you really could use any stock that you want here. We're just focusing our purchases on the S&P 100. And that initial stop is 1% below the 50-period moving average. And then there's, as you own positions, that stock may continue to trend, which is what we hope it does. And so you'll get new buy signals, and sometimes you'll get where the stock changes the trend and drops below the 50-period moving average. So we have an adjustment rule for both of those scenarios. So the first rule is when you get a new buy signal, let's say we bought a stock a few weeks ago or several months ago, and then we get a new 2 green arrow buy signal. The rule says that we can move the stop up 1% below that simple moving average. So, obviously if it's going up, we'd want to go ahead and adjust the stop up, leaving it below that 50-period moving average, trying to give the stock an opportunity to trend. If the stock does close below the moving average, then basically what happens is the MACD indicator, which is the other indicator we're using, is probably already turned red. And then when it drops below that moving average, that's that second red arrow. So when we get 2 red arrows, we're going to, move the stop up. We never lower it. So if we've already adjusted the stop on like a green arrow or a new buy signal recently, then we're probably not going to lower the stop again. But sometimes, you get the 2 red arrows before you get a new green arrow. And so the stop would go 3% below the low price of that day that it closes below the moving average. And several weeks ago, we also did a webcast on kind of doing at least a visual check to see if the stop that we're setting makes sense. And the idea there is if we've got support level at say $50 and our stop adjustment rule says to put the stop at $50.05, generally speaking, we'd want the stop below the support. So, we may adjust that as we do that. So anyway, if you have questions about this rule, go ahead and chat those in. Brett's doing a great job in the chat. Answering your questions. He's very familiar with these rule sets, can answer all the questions that you have. But let's go ahead and jump off here to our Thinkorswim platform. And number one, I guess, cover the different plans that we're using. This is where we'll do the live update. We have some fun stuff going on here with our, ETF tracking plan that we're using. This sample plan number 2, this is the one where we're using fractional shares using what's called Schwab stock slices. And let me just remind everyone that the Schwab stock slices is not intended to be an investment advice or recommendation of any particular stock. There are some specific risks involved when you're doing fractional shares, which is what we're simulating here in paper money. And engaging in fractional shares poses some unique risks. So just be aware of that. But we've got some fun things going on with our fractional shares, our Schwab stock slices here. I just wanted to give you a quick update on this. These are the top 10 holdings of the S&P 500 and the NASDAQ minus Netflix. We just had to make a choice, and I just left Netflix out. But what I've been doing with this particular plan is every week I'll go in and buy $5 worth of each of these stocks. So we're investing $50 each week in the top 10 holdings. And this is what it looks like. If you click on the P&L open here in your Thinkorswim, you can see all of your purchases, and you can see that number one, the quantities that I'm buying are very, very small, like 0.0248 shares. So most of these, we don't even have a full share or even half a share. We have a half a share of NVIDIA. But you can see every week on Monday, I go in here and buy. And I went ahead and did that this morning where I bought those shares. And what I want to point out that's interesting about this method is you'll have to decide, okay, everyone that's investing, whether you're a new investor or an old investor, you need to decide whether you want to buy and hold, which is essentially just what it sounds like. You buy something and hold it basically forever. Or if you want to be more of an investor / trader, let's say. James Boyd did a great session a few weeks ago that titled, I think the title was, selling is part of investing. And you guys have asked me over the last several weeks where, hey, can we have a sell? How do you sell these stocks when they're profitable? James Boyd has some great sessions on that. So go check out his webcast in the Investing Master series. But here, we've been doing some very basic things. We've been doing a few buy and hold where it's just simple every day or every week. We're doing some investing. This particular one on the Schwab stock slices is we're just investing every week, $50 a week in these top 10 holdings. And, right now we're losing money on 2 of those 10, which is kind of interesting. Costco here, let me just show you this one. Costco, our first purchase was when Costco was at $1,008. And that's really just been trending down ever since we got in. There was a little period where it went up here. You can see the average prices have been going up and down. Our average price for the partial shares that we have is $9.63. but the stock is still down at 909. That's the current price today. So, as we do this buy and hold strategies, one of the ways that people think about buy and hold is they're going in and they're buying shares on a regular basis, taking the money that they've saved and that's in their savings account, and they're maybe moving that into their brokerage account, and then they're purchasing shares. Some brokers will allow you to automate this very easily. Schwab is updating their automated investing. Right now, you'd have to manually go into the Schwab Stock Slices page and put that information in. But it's a fun process to just be doing something regularly. This one here is our 2 green arrow system, or 2 green arrow rule set, which again we talked about in episode 3. But this is the one where we are trading a $10,000 portfolio, and we're trying to not put more than 5% of our in total portfolio in any one single trade. And so that allows us to have about 20 open positions. And so, as we, get stopped out of some of these or take profit on some of these, we have an opportunity to add to our portfolio. Okay. And so, and here, Eva, I'm not sure you're mentioning adjusting the rules. At least so far, none of the rules have been adjusted except that we added this scaling out rule, and that was a few weeks ago. So I'm not sure there if you have more details you can give me. But anyway, so we did get stopped out of a position here in our 2 green arrow. And so I wanted to look at that one more in detail and then take a look. There's about 4 or 5 stocks that have given new buy signals. And so together we're going to decide which one to trade today. And if you're new to joining us, okay, Eva's talking to somebody else. If you're new, love to hear. If you're new today, chat in, the first time here. If you're watching the archive, go ahead and put a comment there in the YouTube comment section. I'll look at those every day and respond to those as well. But the first thing, again, we went over that trading rule. So let's go look at our first chart. EMR is one that we bought. We bought the first shares of EMR on the 16th of June. Now, we started this whole process on the 9th of June. So we bought this one about a week after we got started. The stock trended up really, really nicely. We're making some good money on it. And then it kind of tanked on us over here. You can see that we had the 2 red arrows signal here, but that happened after we got this new buy signal. So we'd adjusted the stop over here. That stop was about $128. And it kind of bounced around. This particular day was a very volatile day. So what I did and why we didn't get stopped out on that particular day was because I put the stop order to be at the end of the day. And, the way that you can do that on Thinkorswim is pretty easy. I don't know if we'll have time to go over there, but basically I activated that stop at the end of the day. So we didn't get picked off on the volatility. Luckily, it rallied back up and kind of bounced around for a little while, and our stop was there about $128. And so in the meantime, a few weeks ago, we talked about having a scale out, and I took EMR, I took GM, and I took one other stock. I don't remember which one it was right now, but where we set an order to get out when we had a 5% gain, and we sold half the shares, and EMR was one of those. And right here you can see from our original purchase price that we hit a 5% gain. And so I sold half, which was only 2 shares in this particular stock. And then on Friday, we got stopped out. Okay. Intraday, it went down, picked off our stop. We actually got filled. You can go over here to the monitor tab, account statement, and we got filled at 127.77. So you know how we talk about there's no guarantee that we're going to get filled at the stop price. Our stop was at 128.01, I believe, and we actually got filled at 127.77. So this is what we're talking about, is there's no guarantee that we're going to get filled right at that stop price. And so sometimes it'll get filled lower than that. So, that's just evidence. Even in paper money, we got a lower fill. So it's possible, it's likely that we're not going to get filled at or near that stop price. So be aware of that. All right. So, here we are now looking at EMR. We've been stopped out. So now the question is, well, what can we buy? So again, our watch list that we're using is the S&P 100 And I've gone through this already today just to save us some time, but I found a few stocks. And so what I want to do is go through each one of these. I'll give you the symbols right here verbally, but Johnson & Johnson, GM, CVX, those are stocks that we own that have given new buy signals. So we have a stop adjustment to do on those. And then MO is the symbol of another stock that has a recent 2 green arrow signal. RTX is interesting. It gave an older 2 green arrow buy signal, but it recently broke resistance. So I want to talk about that one a little bit. And then XOM is the other one. And so as we go through these here today, we're going to look at them. And again, none of those are recommendations. Those are just ones that were in our S&P 100 watch list that had that. And we're going to take a look at each one of those that I mentioned. So let's start here with our first one. So Johnson & Johnson, we bought on the 2 green arrow signal that we had back here. I like to draw a little green oval when I get in. And our current stop is down here at about 157.76. And the stock right now is trading at 180. So very first question that kind of comes up is we really haven't had an adjustment rule since we got in. Do you guys see that? For that whole shaded period, we bought the stock and it didn't give a new green arrow buy signal and it didn't give 2 red arrows. So we haven't adjusted the stop. Now, some of you may feel really uncomfortable with that, having the stop so far away from where the current price is, but that's just part of the trading plan. I think the more that you get used to doing this, number one is you recognize, hey, if it gives a red arrow, we have a rule for that. We'll move the stop up. If it doesn't, then we can wait for the new green arrow buy signal and move the stop up then, or just not worry about moving the stop up. So you'll have to decide what works best for you in your time. But I know that, I guess that was Thursday or Friday, we got this green arrow on the moving or the MACD. The stock was already above the moving average. And so this is actually a new buy signal as of that day here. So what's the rule? You guys help me out. Our rule that we went over earlier is to put the stop 1% below the moving average when we get that buy signal. So the moving average, let me go ahead and add a little vertical line to my cursor here. So this particular day, if you look up here at the top right there, so like that cursor is on that day, the moving average is at 174.21. So where does the stop go? You guys calculate that out as we look at this and work through this together. Where does the stop go? This stop adjustment that we need to make. Okay, 174.21. How do we calculate that? Well, take our calculator and just take the number 174.21 times point what? To get the answer to where the stop goes, if you multiply the moving average value by 0.99, that'll give us our new stop number. So in this case, 172.46 is where the stop would go. Now, I hope this is routine, but like the very first thing that you should think of when you get this new stop number is, does it make sense? So when I'm asking that question, I'm trying to go back in time and see where my last low in the trend was. Okay, so it looks like our last low was right there. So 173.55. Our stop adjustment rule says to put the stop at 172.46, which is below that, which in that one sense, it does make sense. Okay, and this is where we are today. And so if we put our stop in there, I'm going to draw just my kind of trend line tool, and I'm just going to try to draw a horizontal line. I'm not even going to worry about it because I'm going to fix it. But right here, I'm going to go ahead and say edit properties, and we're going to go in and put our stop number in so visually we can see where it is. What was our stop? Again, probably have to take our calculator. So 172.46, right? So we're going to put 172.46 on our line. And if you do the start and end at the same point, then it's horizontal, right? 46. So we'll click OK. That's where our stop will go if we follow the rule exactly. Okay. Now, does that make sense? Now, some of you may say, well, that's really close to this old support level. I don't want it to be that tight. Some of you may say, well, that's the rule and I'm going to follow it because I think the trend's going to continue. But just realize again, the closer that stop is to the moving average, the possibility is there that the stock may get stopped out. But we'll go ahead and move that. Now, here's a really cool fun part. how do we move that stop? What are some ways that we can move that stop? Well, if you have on your, if you click on the gear up here and you say show orders right here on the general tab, show orders, you can see that order will be on the screen. And here's a real cool thing. Watch this. I can left click on this and just drag it up. And again, I'm going to probably edit this. So don't worry about getting it right on there, but we'll try. We're pretty close right there, right? 172.61. That's not exactly, but it'll pull up this little order window confirmation box, and then I can edit it. And where did our stop need to go again? Do you guys remember? Jay Richardson chatted that in, so let's use his or that number there. I don't know if that's a him or a she there, but Jay, thank you for doing that. 172.46, I believe it's is the right answer. We have good till cancel. We hit confirm and send. We realize it's a stop order, not guaranteed to get filled. Read the red part down here, and not guaranteed to get filled at the stop order necessarily. That'll trigger a market order, and we click send order, and now our stop's been adjusted. So that's on Johnson & Johnson. Now, as we look at these, this is, if it has a new buy signal, we could actually add to this position. So keep that in mind, as we look at these stock, which one of these that we're looking at, and we're going to look at about 6 or 7 more of these here real quick as we adjust the stop. I'm going to go through this a lot faster on these next ones just for time. But so Johnson & Johnson is one we own and adjust the stop. GM's another one. GM, we bought on the little breakout over here. We got a new green arrow buy signal. The stock's way up here, gapped up, pulling back a little bit. The moving average is down here. Where's the moving average value? How do you see it? Go up here, it says 56.44. Where do we set our stop? 1% below that. So let's do that. So 56.44, let's grab our calculator. 56.44 times 0.99. So our new stop's at 55.87, which will be below the moving average. Looks like the last lows are up here. So we're just going to grab this. So 55.87, remember that? Drag that up, 55.87, pretty close right there. Grab our screen, edit it, and we're going to type in 55.87. Just double check good till canceled, hit confirm and send. And remember, it's a stop, so it doesn't get guaranteed to get filled at 55.87. Just going to trigger that market order, send that off, and now we've adjusted our stop on GM. Another one, GM, Johnson & Johnson and GM that have essentially new buy signals. So that could be in our list to replace the one that we lost with EMR. Take a look at another one that we own, CVX. We own these in the paper money, obviously. Okay, now this is kind of interesting. Sometimes this will happen, right? CVX we got a breakout buy signal here back on the 22nd of August, and that's when we bought it. Really hasn't done a whole lot for us. In fact, we've got some new resistance up there about 161.86. We had a buy signal or a new green arrow buy signal here where we could have moved our stop up. Now we're getting a red arrow today, a big drop today. This is down 2.5% almost. So the question is should we move the stop here today? Should we move the stop today? We could have and should have, maybe based on our rules, moved our stop up here on Thursday last week. So 155.68. So let's go through the mechanics and then we can decide what we want to do. All right. So 155.68 was where the moving average was. We put our cursor again on that particular day. Just double check that. 155.68 times 0.99, and that equals 154.12. So 154.12, the last low here is at 155.15. This low's at 152.88. So this is kind of where now the question comes is, should we move the stop up? Here's kind of a philosophy. Some traders will say, well, after I get into the stock, I don't really want to move my original stop unless the stock keeps trending up. This case here, we actually did adjust it over on this buy signal here, which moved it up a little bit from where it was. But the question is this stock really hasn't trended too much. I hate getting stopped out of stuff, especially after I get in and I move a stop up in here. This range really right now, the range the stock is kind of trapped in is here between, 161 and this low from a week or so ago. Let me draw a line on that one. They're about there. So this is one way to look at this. Some investors would say, you know what, we've got our stop in place. We've position sized this appropriately. The stock's really not trending. Plus we have a red arrow today. I didn't adjust the stop. I've got a red arrow, so I don't really have a new adjustment signal today. So I'm not going to go ahead and move the stop. So the principle here, if you're trying to take notes or whatever, the principle is let the original stop do its job, which is to get us out of the trade with an acceptable loss if the trend doesn't continue after our purchase. We can move our stop up here based on the rules, and it would have gone. Let's go back to that day. The moving average was at 155.68. We calculated the stop would have been adjusted to 154.12, and that's going to put it like right in here. And there's nothing wrong with moving that stop up here. We're reducing that original risk that we had because the stop's going to be higher than that original stop, but it does increase the likelihood that we get stopped out. So you'll have to decide, do you want to keep the stop where it is? I think some traders will look and say, well, I'll go ahead and move the stop up a little bit below 152.88. They might go 1% to 3% below that. Some may just follow the rule here. I'm going to go ahead and just put it like 1% below this last low of the channel. So let me do that. 152.88 times 0.99. And that's 151.35. It'll move it up a little bit. So 151.35 about there. We're going to edit this order to get the stop right where we wanted it at 151.35. And hit confirm and send. It's a stop order. Remember the rules with the stop, send the order off, and now we have the new stop adjusted there. And, some people maybe put even a little note there to what they did. This day, adjusted stop to 1% below support, something like that. Just to give a note to themselves of what they did. And then when you hover over that, you can see what the note says. All right, so a couple things here. Number one is we have some stocks we've looked at. I wanted to take a look at one more because we're going to do the buy order. I also noticed there's a survey in there. Eva pointed out that I read all the surveys, which I do, but I'd really like to hear your feedback on this particular class. If you're a new investor, what can I do to help you learn more? If you're a veteran investor and would like to learn more about stock investing that you can help with your children or grandchildren or great-grandchildren even, let me know that in the survey. Would love to hear your feedback on those comments there, but there is a link for that survey. So Brett's reposted that there. You could put that in there. All right. So let's see. Chris says, I'd say the question is, are we still bullish or do we think the topping pattern? Which is a great question. Is this turning into a triple top? Is it turning into a triangle? There's certainly some consolidation going on. Whether we call it a particular price pattern or not, I think is in the eye of the beholder a lot of times. But so, maybe another reason, if there's consolidation going on, that is a time where investors and traders decide, you know what, we'll let that original stop do its job. Either let this stop us out with an acceptable loss, or we'll go in there and take we'll adjust the stop up. All right, so there's a couple other stocks. I just want to look at these real quickly because I do want to do that segment on the ETFs later here in a minute. MO is a stock that, it's kind of has a diagonal resistance line. We got a green arrow. So technically this has a valid buy signal. So I'm going to show these to you and then we'll decide together which one we want to trade. Okay. MO is here on a diagonal resistance line. So it hasn't broken that out. Some traders might say, you know what, green arrow, I see that we have a green arrow, but until it breaks the resistance, I'm not going to go in there. RTX was one I thought was interesting. Here is it had the green arrow quite a long time ago, but had that horizontal resistance, and it broke out of that on Friday. It's gapped up today and it's pulled back a little bit. So, some traders, and this is the one I think that I want to do our example trade on, and I'll show you kind of an interesting way to look at it. And then the last one was XOM. So these are just stocks in our watch list that have buy signals. XOM has the green arrow, but it's, it did break out, but now it's kind of trading back below that. Some traders on XOM might say if it trades back above 115, then I'll get in that one and it closes above resistance. So some different ways to look at this, but I want to look at that RTX one, and I want to show you just a technique that you can use to consider when you're following your rules. So we have our buy signal. Now here's a little technical analysis tidbit for you guys. Some of you know the answer to this, but what is common about old resistance becomes what? Old resistance becomes new support often, right? So what I want to do, I'm going to zoom in here, and it doesn't always come all the way back down to that area, but I'm going to take a look and just eyeball right here. We have our resistance line about 161.26. We can invest up to $500, so we could probably get 3 shares of this particular stock. And I'm going to put a limit order to buy this near this 161.26 resistance level, and we'll go a limit order, and we're going to put the stop 1% below the moving average. So 157.04 is where it is today. We don't know if this order is going to fill because we're going to use a limit order, but I just want to show you this technique. All right, so here we go. The moving average today is at 157.04, so we're going to figure out where our stop's going to go, times 0.99. So 155.46 is where our stop is going to go, and we want to go ahead and buy some shares, but we want to buy them down here. We'll put a limit order at like 161.50, just a little bit above that. And then our job is to keep an eye on this to see if it fills over the next few days. If it comes down and looks like it's going to bounce off of there, we may have to raise our limit order. All right. But I'm going to go ahead and show you how to do this. We're going to right click on the chart. Check this out. Buy custom with stop right on the chart. We don't even have to go to the trade page. And we can buy, we can get 3 shares of this, it looks like, because we're going to invest up to $500. And we said our stop was going to be, 155.46. And we need to make the stop good till canceled. And then this actually, that's if we're going to buy it now. We want to put 161.50. So we're waiting for the stock to pull back a little bit. And we'll make that good till canceled too, because we don't know if or when that'll even fill. And then we'll hit confirm and send. And then we just kind of double check a few things. Okay, we have our order just above that resistance area. We have our stop that's 1% below the moving average. And we're going to put this in our 2 green arrow group. We want to double check to make sure we're not investing more than $500. And we're going to send that order off. And that'll just sit there if the stock comes down and gets in there. So our job is just to watch this one. Okay. So, again, as we've looked at these different stocks, we've gone over the 2 green arrow plan. I made the announcement. We've kind of covered what I wanted to cover in our live or our recorded session today. And, again, remember there is a survey for our session today. I'd love to get your feedback. Please fill that out. And then remember, everything we talked about today is for educational purposes only. All right. So let me take a hard break right here, and I got to show some different slides. So this is the end of our recorded session. All right.